Anil Kothuri, MD and CEO of Fedbank Financials, is joining us now. Thank you very much, Anil, for joining us this morning. Let's start by the issue which is talk of the town in the entire lending space. We all know that gold loan is one of the most speedier way of accessing credit for certain section of borrowers. But there have been some regulatory nudge, perhaps to do with some deviation certain lenders were taking. I want to understand, would this, kind of put a spanner in the works? This was a high growth area as well. Overall lending via gold loan will come down. What are your thoughts on the way your business has been so far?
Good morning. So gold loan is an integral part of the lending universe in the country, and it tends to be an entry-level financial product. It's at the forefront of financial inclusion. And if somebody wants a loan in a day, without a credit footprint previously, then a gold loan is the easiest. Borrowing against gold is the easiest way of getting a loan. Now, we are seeing a lot of traction when it comes to lending against gold. There are a lot of things, a lot of tailwinds blowing. The first is that the prices of gold are at an all-time high and have been increasing over the past month. And the second is the fact that March tends to be a seasonally busy period where people borrow against gold. And the third, of course, is that important players have vacated the market, and we are plugging some part of the gap that has got created. So all in all, the gold loan business is in a good shape right now.
So what's the desired level of gold loans as a percentage of your total AUMs that you're targeting on your books?
Our gold loan portfolio is upwards of 30% at this point in time. And the growth of the gold loan business is asynchronous to the rest of our businesses, because there is the price of gold that tends to be an important variable, and gold tends to grow in fits and starts. But suffice to say that we are confident of maintaining the current concentration of gold loans in our portfolio, which is at about 28 to 30%.
At a time when there is a regulatory action against certain other NBFCs and banks, is it time to go aggressive and gain market share?
Look, the Reserve Bank has not said anything new, or they've not said anything that they've not been saying for the past few years. Okay? So therefore, any regulatory action that has happened is merely a reiteration of the Reserve Bank's existing stand, and a reiteration of the fact that we need to abide by the norms and dictums laid out in the regulations. Obviously, the demand for borrowing against gold is strong and is not depleting at this point in time. So obviously, if some capacity in the market disappears, then we, like other lenders, will plug that gap.
Large to your mind is the home loan market or gold loan market in India?
The gold loan market in India, yeah.
How large is the market?
My estimate is that the market for borrowing against gold is upwards of about 6 lakh crores. About a fifth is with NBFCs. And even this is only about 40% of the total borrowing against gold, which means 60% is with the informal segment, money lenders, pawnbrokers, jewelers, and the like. So obviously the opportunity in gold loan is formalizing the informal, pretty much like what microfinance has done over the past 2 decades or so. So that opportunity is ahead and awaits us as gold loan lenders.
I'll shift attention to the other business, which is the loan against property, small ticket. How large is this for you, and what's the average size of a loan here?
The loan against property business, the small mortgage business, is about 3,000 crore rupees strong for us. It's about 27% of our portfolio at this point in time. Now, the average ticket size is about 12 lakh rupees, which means the borrower tends to have an income of between 5 and 6 lakh rupees. This borrower stands square at the center of our mission to empower emerging India with easy access to loans. That means we lend to the small self-employed borrower who is currently quite underserved by the entire financial system. we see a gap there, and that is what we seek to fulfill.
You have, I want to go back to your growth because of this high gold loan growth coming in, some of the capacity is becoming spare. Does it give a positive push to your overall loan growth? You have guided for upwards of 25% sustainable, but you have actually recorded much higher growth. Do you think it will have upward bias in next 2-3 quarters?
That's right. Like I said, one-off events such as the exit of competition or the increase in prices of gold will give a fillip to the AUM. And as and when they happen, those are tailwinds that we will ride to deliver above the 25% guidance that we've put out.
In how much realistically are you competing with Federal Bank when you're dispersing a loan? I mean, are they independently done? How does it work? Because gold loan is something which even Fedbank is financing against. Home loan is something which they are also giving. Loan against property is something which they are also giving. How do you collaborate and how do you compete?
So the bank and Fedfina have distinct target markets. We cater to the average self-employed, the small emerging self-employed customer at the peripheries of metropolitan India or tier 1, tier 2 towns. Whereas Federal Bank caters to established self-employed customers and salaried customers. And each of the products that you alluded to cater to different segments. For instance, Fedfina's average ticket size when it comes to gold loan is about 1 lakh rupees, and we have an average yield of about 17.5, 1775. Whereas Federal Bank's average ticket size is upwards of 3.5 lakh rupees, and their average yield is about 10%. So it's a distinct customer. Similarly, our loan against property average ticket size is 12 lakh rupees. We lend at 17%, whereas Federal Bank lends at between 9.5 and 10%. Their average ticket size is about 5 times ours. So these are distinct target markets, distinct customers, and distinct product propositions that we offer. And while these are mortgage or gold loans in name, okay, there is quite a bit of nuance within that.
Okay. All right. Really appreciate your time. So glad you could join us and walk us through how dynamics in the entire home loan segment is changing and how Fedfina essentially would be focusing on creating more value there.
If you like this video, then like, share and subscribe to ET Now.